After the year of the virus, followed by the year of the vaccine, all of us were hoping for 2022 to be the year of normalcy where we can go back to our pre-COVID lifestyles. Ironically enough, we are still in the middle of pandemic. Omicron or any of a COVID variant could still be a threat, but our focus has now moved on to the geopolitical events that are playing out because of the Russia-Ukraine conflict. The focus of my update today is to understand the implications of this conflict in context of the macroeconomic environment we find ourselves in, and how or what could be the implications of this on our portfolios or on our investment goals. Greetings, viewers. You're watching Aman Sanga, Independent Financial Advisor in Mississauga, Ontario. For my update for the month of February, in context of the environment that we find ourselves in, I'll break my update into three main components. We'll start with the index returns. We'll talk about inflation, and we'll talk about the Russia-Ukraine conflict. And what you'll see is clearly all three topics are very intertwined in the situation we find ourselves in. So let's start with the index returns. You can see that the year-to-date index return or asset classes returns are largely red. There is some black. The TSX is relatively flat, and it's riding on the price of oil, which has jumped almost 50% from where we were at the start of the year. And because of the turmoil, there's a flight to safety, which we are seeing reflect in the price of gold. Now, with that big picture in mind, let's move to where the story was for inflation. Now, inflation was running high before this conflict. This is number from US, where it's been high, the highest number clocked since 1982. But of this number, 7.5%, almost half of it is contributed by transportation, which is gas and car prices. So this is before the price of spike in the price of oil. Now let's come home to Canada. It was inflation clocked at 5.1%. That was the highest since we've seen in 1991. And transportation was a big component of this. Again, before we saw the price of spike in the price of gas. Now, before the conflict, the expectation was that the supply chain issues will even itself out or smoothen itself out as we go through the rest of the year. So the expectation from Bank of Canada was that the inflation levels will come down as we get into the second, third, and fourth quarters. But so by the end of 2022, we would be at a level which is much more comfortable or acceptable to the central banker. And then we have this wrench thrown in, which is the Russian-Ukraine conflict. Now, what the conflict has meant is that to respond to that conflict, the world has responded by, in general, putting sanctions on the Russian economy. So far, the oil and gas exports have not been part of those sanctions, but in general, what that has meant is that there will be less economic activity. Now, the Russian economy is a relatively small economy, like it's almost the same size as Canadian economy. But what makes it so different, or Russia so different, is share of natural resources. And you can see that, it stands way above any other country across the world in terms of the natural resources it has. And because of this natural resources, what it exports is very important to the world economy. Now, there are some ingredients which are needed for the making of electric vehicles. That component, along with its production of oil and gas, makes it very important to the world economy. Now, as Russian assets become toxic, a lot of buyers will shun these or to avoid those being seen as participatory to the sanctions. But those gaps are not easy to plug, especially in Europe, which is really dependent on these exports from Russia. So if you look at it in context of the environment that we've seen, the inflation that we have seen higher, which was expected to come lower towards the end of the quarter, by the end quarters of this 2022, if this conflict doesn't resolve itself, that inflation is going to stay high. Now, in the environment we are in, where Bank of Canada already had a rate hike, and we are expecting more to follow for 2022 and 2023, this could be a headwind for the growth of the global economy, especially when we are seeing the oil prices jump up where they are right now. So I'm not saying that recession is out of the picture or it's imminent. But I think we have to be careful and look at it from a long-term perspective. That these are all the geopolitical events listed from back in 1939 to the recent annexation of Crimea in 2014. And you see, in case of there is an event, we definitely see a dip in the asset prices. There is a flight to safety and investors will sell. But if we are prudent and can have a long-term horizon and we can wait through it, we'll see that 3 months, 12 months out, most of the time, that's about 3 out of 4 times, we will end up in a situation which is at levels which are higher than where we started going into the conflict. Again, it's not all the time, it's most of the time. So I just want to conclude this by saying that if you haven't evaluated your portfolio in a while, it's time to relook at it. If there are long-term goals that you haven't looked at or revisited it, it's time to reflect your positions. Given the long-term picture, there might be cash sitting on the sidelines, or there is an opportunity to get in at a point which will lower down the average cost of your portfolio. Now's the time to do that. And the number to call is 905-363-5035. Praying for the safety for all the civilians that are trapped in Ukraine and impacted by the conflict. Thank you so much for watching, and bye for now.